Welcome back to halftime. Now for our call of the day. Stifel downgrading Datadog to hold from buy. The stock is extending yesterday's losses when it posted its second worst day ever after issuing weak guidance. Joe, you own this name, so we have the opportunity to talk about it with you today. What do you think?
Talk about what I did. So in early May, I bought this stock at $86. A lot of the reasoning was I believe this infrastructure software company would be a leader in generative AI. The stock rallied subsequent to that. I sold half my position at 96. I still maintain the other half of the position today. I look at it statistically from a risk management perspective. My break even is somewhere slightly above $76. The reasoning I'm maintaining the position today, and by the way, I expect this stock to continue to be under pressure because it was one of the favorite infrastructure emerging software names on Wall Street. The guidance was not good. That's clear. The bookings, you could make the argument, was okay, supportive, but I bought the stock on the belief that in the long term, this company would be a significant contributor and part of that winner-take-all universe for generative AI. So it's about how you manage a position and what flexibility you're able to give yourself. Getting out of half at 96 allows me to stay in the position a little bit longer, give them the benefit of the doubt, and to see ultimately if they could utilize generative AI to increase revenue. But I want to be very candid on this. Right now, the momentum is down. The pressure is clearly pointed to the downside. And if I had to guess, I'm probably going to get stopped out of this stock before the generative AI contribution, and the stock will end up being a scratch for me as terms of a trade.
I mean, Amy, obviously, Stifel may be a little late to this one. Obviously, the stock is down about, what, 17% or so. So downgrading it now, it's like, okay, obviously, and the guidance going forward is not good. Generally, though, is this a stock that you would look for an opportunity in generative AI, or do you believe that's just going to come too late?
In general, we're not looking. We do own some names in the space. We don't own Datadog. But in general, as Rob said earlier, we've been moving down valuation in our stocks. Cadence Design Systems, which is a name we've owned forever, which we love. It has had a fantastic year. We trimmed it recently. It had a blowout quarter, blowout earnings, blowout guidance, and the stock was up 2 or 3%. And that just tells me that there's a lot of good news baked into these names already. And so you need to get blowout numbers, which is in this environment, it's going to be hard. Companies just don't have the budgets. They're not raising their IT budgets 20, 30%. Yes, they're spending on generative AI, but I think a lot of them still don't even know what that really means. So and they don't have the money to go whole hog into this right now. So I think I do think this space has gotten overdone. We're going to probably wait for even greater pullbacks to get more interested.
In addition, the bar has been raised significantly because the software sector is one of the sectors where earnings are expected to be up in 23 and 24. So not only do you have all these demographics in play, you have a higher bar to jump over later on. And so you have to be really focused on what you own. You have to love it, and you have to make sure it's priced right.
Yeah, because Amy brings up a point about how expensive Datadog is as well. And Rob, you also own Cadence Design.
We do. I mean, listen, this is a beneficiary of semiconductor design needs and the whole investment in the AI infrastructure. So it's a great business, right?
Yeah, it is. I mean, obviously, this is an area where we need to have intense focus, but also probably some intense scrutiny because so much of it is still unknown.
And if you listen to the Cadence call, what was so interesting, they were talking a lot about AI, but then he went back to all the other things. It was like, well, at some point it was autonomous driving, at some point it was 5G, at some point it was cryptocurrency. We've had these fads sort of come and go that have been driving R&D in all of these markets. So I don't think there's always something, there's always the next thing. So you want the company that can flex and move to whatever people are focused on.
There's only five stocks left in the JOTI ETF that have been owned since inception in November of 2020. And Cadence Design is one of them. And it's probably one of the least talked about software, technology companies on our show, but it's a remarkably resilient, profitable company, and it has such a moat within its business universe. It's something that I would buy even here today at 224.
Cadence, we need to bookmark that one. Come back to that one again.